Why I don't like gold mutual funds and just say buy the actual physical gold and silver itself. Let's dive into this. I get this question a lot actually. So I want to share with you. Here's the price of gold going historically, and this is on macrotrends.com. And what you'll see is we have in 2000, it was about 400. Let's see, 450 bucks, right there, right there. 440 is 440 an ounce. At the end of what's this? May of 2011, October 2011 is 1988 an ounce. All right, so we have 450 bucks an ounce to 1988. What's this? Probably, yeah, right there, inflation. All right. So what we're going to do is we're going to go put $440 starting in January, and then we're going to go until 2011, and we're going to see what the fund, the USAGX, let's just go to 2010. We'll do in decades. USAGX, which was the number, actually, we'll even go to 2009 to give us 10 years, so we can compare 10 years. USAGX was the number one performing fund in the, I guess in America, maybe even the world for that decade of time. It's nuts how well it did. All right, so going back, let's go to 2010 because we got, I guess we got 2011, 12, yeah, oh, there we go. It'll be 10 years, 2 10-year intervals. All right, so what we're going to do, we got $440, USAGX, the USA Gold and Precious Metal Fund, the literally best performing fund of the decade of the first part of this century. And we're going to analyze portfolios. All right, so $440 grew to $5,483, man. That's some, I think it's like 33%. You look at it. Annualized return, full 25% annualized returns. I guess, because we got 11 years. Yeah, so 11 years, 25% annualized returns. That's freaking nuts, man. 2010 up 39, 62. Let me look at that. Crazy. All right. So now we take our, what was it again? We're up to $5,483, and we're going to start that in 2011. 5,483, and we're going to do that starting in 2011. All right. And now we'll go to today. The good old 2021 was $5,483. What's it worth today? But all right, so today it's worth 3,063, $3,000. So we've lost over the course of that time 5.61%. Compounded annual growth rate. So we've lost 5.61% in annualized. Now, let's take a look at actual gold itself. So again, it was up here at 1868, and right now the price of gold is what at, let's just go to JM Bullion, see what it's trading at right now. JM Bullion, we'll see what gold is trading at right now. 1815. All right, so you basically, you haven't made any money. You haven't lost any money. You're right back. You are right back to where you were at the beginning of this. Well, I guess the last decade. Whereas the mutual fund, you're down 40% from where you were. How long is it going to take to get that money back? But not only are you down, you get taxes, right? Because you had to pay. You still paid $400, so you got long-term capital gain. Your gold, well, it's kind of off the grid, really. That's why I'm not a big fan. I think that fund I guess portfolio valuations only started in 1985. So let's go back. We can go back to portfolio valuation and see what gold did in 1985. We'll start at end at 1999. I have no idea what the fund did. I should say the fund did. All right. So let's go to portfolio valuation and see what this fund did from 19. Oops, I want to just start with, let's go back to this guy here. We're going to start in 1985. Hold on just a second. And that's 1980, 1985. So about right there, about $700. Yeah, right there. About 700, what was that? 793. So we'll start with 793 in 1985. Let's see what the Gold and Precious Metals Fund did till the end of the century. All right, so we'll see. I literally have no idea. So we're going off the side this time as well. It made no money. So from 1985 until 1999, you actually lost less, about 2/3 of 1% each and every year. Now you did get a nice little run there during the Great War. That's not the war, actually. That's weird. That must have been the Great Crash, the October surprise, I guess. No, that's not an October surprise. That'd be the October surprise. Yeah, I don't know what that run up was. That's interesting. Anyway, but be that as it may, you made literally no money whatsoever. Isn't that crazy? So let's see what the price of gold did during that time from 1985. Now right there, 793. You were down to, what would you say, 1999. You're down to 440. So you lost money on both. All right, so the Gold and Precious Metals Mutual Fund, you lost money. Not quite as much, I grant you, but the gold actually itself lost a little bit more. But you still had the gold, man. Whereas the Gold and Precious Mutual Fund, the first decade of from 2000 to 2000, I guess we didn't do let's take a look at what the price of, did we do that? We did. Yeah, the price of the gold went from, yeah, we did that. So the Gold and Precious Metals Mutual Funds, just kicked butt, took names in the first decade of 2000 to 2010. Did we not? Actually, I don't think we did. So let's go to 2000. Yeah, we did. We ended at 1800. Yes, it did. So ended up at 1800. So the Gold and Precious Mutual Fund you actually had more money from the Gold and Precious Metals Mutual Fund than you did from actually the gold itself. But at the end you still have more money in the fund now, all right? But you have this huge amount of volatility, and you're just investing in stocks. That's what I'm trying to say. And here you still got the gold. Like, just keep the gold. I mean, the gold you can use off grid. The actual mutual fund is still a stock fund, man. It still has all the compliance crap you got to do with all the SEC stuff, all the taxes you have to pay. I just say, yeah, don't do that. Just if you're going to buy gold, just buy the mutual, buy the actual the physical stuff. On top of that, you still what was I going to say? You can trade that in terms of you're going to use that to buy stuff with. On top of that, at the end of the day, you're still going to pay income tax on the Gold and Precious Mutual Fund if it's an IRA or if it's long-term capital gains. Yeah, you could get a loss, I grant you. Lastly, your index fund is going to have, if you have a total stock index, is going to have an exposure a little bit to that Gold and Precious Fund anyway. So, I don't know. I hope this helps. I just, if you're going to buy gold, just buy gold. Don't buy the fund. It's just buy an investment. You're already going to have that in the index. So, hope this helps. I'd like to hear your questions. Thanks now.